Defense stocks are selling off. Not a good afternoon for them after Goldman Sachs did a sweeping downgrade of the sector, saying that at current prices, the stocks reflect a global geopolitical superpower struggle, but not the possibility of Congress refocusing its attention on debt and spending. Goldman knocking Lockheed Martin and Northrop to sell, those stocks doing 3 to 6% lower right now. Raytheon to neutral, while that stock is lower by 2.5%. Let's bring in Morgan Brennan to discuss this. One of the points that I seem to pick up in the research is the idea that maybe defense spending has gone to a secular peak. Or a cyclical peak is really what I'm trying to say.
And I think that is now the question that's emerging in these first 2 weeks of 2023, because to your point, we saw a record defense spending last year. The fiscal 2023 budget here in the U.S. increasing by nearly 10% on the top line.
Even more than the president had asked for.
That's right. More than the president asked for. You had all the increases tied to Ukraine as well. Plus, you have all the defense spending that is increasing the world over. But that said, here in the U.S., you also now have this renewed interest in the debt and the deficit and potential talks about not only caps on discretionary spending and pushing back defense spending to the levels we saw last year, but also this idea of, a 2011-style price cap on defense moving forward. Now, the likelihood of that happening, probably not very high if you talk to analysts, but this idea of girding for gridlock in D.C. is very much what is the focus. It's a big focus of this note from Goldman, as well as others that have put notes out today.
And it feels like, is that what's changed? If we go back, we actually had guests here coming on and telling us how excited they were about the defense sector, even just a couple of weeks ago, because they said, look, you finally have the Ukraine war uniting even Democrats behind the idea of increasing spending. Well, boom, then the Kevin McCarthy debacle hit. Is that what changed everything when people said, wait a minute, this might empower a group of Republicans who have no interest or, like you said, trying to maybe pull back a little bit?
Yeah. And I think that's why, and Cowan wrote about this just yesterday, basically saying, quote, a full year CR, continuing resolution, or longer for discretionary spending may be the best outcome when it comes to defense budgets and how that's going to impact the defense stocks. A continuing resolution would basically keep spending at current levels, looking to fiscal 2024, but it would mean no new initiation of new programs or new spending initiatives for the Pentagon. So it's still considered very debilitating when you're talking about military modernization.
In the Goldman note, is there one company that is better positioned in their view than others?
So what's interesting about the Goldman note, and actually it speaks to what we're seeing play out in these first couple of weeks of 2023 in general, is the downgrades are Lockheed Martin and Northrop Grumman, which were really the two best performers within defense and aerospace, and some of the best performers in general last year. We saw a big run-up because of defense spending, because of geopolitical risks, because of the defensive nature of defense stocks last year. And now those are the names that are selling off some of the most aggressively to start this year. The D.C. angst certainly playing a role here, but also the fact that you're at near all-time highs in terms of valuations. And again, to your point, this idea of a peak. Plus, you've got uncertainty around supply chain. And this is a little bit wonky for television, but it's going to make earnings season very noisy in the coming weeks. The fact that you saw this R&D tax credit change that didn't get reversed in the omnibus spending bill. What basically means is that companies like the defense contractors that spend a lot on research and development are not going to be able to immediately write off those expenses. They're going to have to amortize them over 5 years. So a company like Lockheed Martin, for example, you could potentially see some very hefty multi-billion-dollar charges baked into forecasts for this year now.
A lot of headline risk.
Yeah.
That'll leave it there. Morgan, thanks. Good.